Good morning and welcome to the Daily Hunt for Multibaggers on this Tuesday, January 27th, 2026. What a Monday we had, folks. Our AI sifted through an absolute explosion of market discussions from January 26th, flagging a significant number of different stocks. The overall market sentiment we're seeing, well, it's definitely leaning towards promising, with a lot of bullish chatter. But as always, Brooke and I are here to dig into the details.
That's right, Ethan. Promising perhaps, but with a healthy dose of caution needed, especially with the volume of posts we saw. We've got a lot to get through, so let's dive straight into today's hot leads.
First up, let's talk about NVIDIA NVDA. Our data shows overwhelmingly bullish sentiment. Users are calling NVDA the company that cooks the drugs for the data center and AI space, a foundational player. We're seeing mentions of strategic investments in CoreWeave, HBM4 chip approvals, and even high-profile long-term options purchases by folks like Nancy Pelosi, all pointing to massive future growth. Plus, its revenue growth is at an exceptional 62.5%, and net profit margin is a stellar 53%. Our last rating was stay away on January 14th, but with this kind of momentum and these numbers, it feels like a big shift.
Well, Ethan, while those growth numbers are undeniably impressive, that 46 PE ratio is certainly pricing in a lot of that future potential. And let's not forget the NVIDIA supply deal in crosshairs headlines and some insider selling activity, even if minor. The beta is also quite high at 2.3, indicating significant volatility. We have to ask, can even NVIDIA sustain that level of premium? It's been a stay away or cautious buy for us pretty often in the past, so this jump is significant.
I'm still feeling very good about its strategic positioning.
For NVDA, considering the robust financials and strategic moves, despite valuation concerns, we're classifying it as a buy.
Next, Amazon, AMZN. While the posts about high-profile trading were a bit mixed, our deeper analysis shows AMZN as a clear long-term winner. That huge $35 billion investment into AI spending, that's a game changer. Insiders have been net buyers over the last 6 months, and analysts are raising price targets, calling it a millionaire maker stock. Revenue growth at 13.4% and an excellent ROE of 24.33% means it's still growing strong. We rated it a buy on January 23rd, and that trend continues.
Ethan, the user comments we saw were pretty neutral on Amazon itself, focusing more on the specific trader. And while Amazon's growth and profitability are strong, its PE ratio of 33.67 is still quite high, and that debt-to-equity ratio of 43.4 is something to monitor closely for a company of this size. Job cuts, even with AI spending, can signal underlying pressure. But the insider buying is a strong signal, Brooke. For AMCN, given the strong fundamentals and strategic AI investments, we're maintaining our buy classification.
Let's talk about Alphabet, Google. The overall sentiment is bullish here too, mainly driven by their aggressive push into AR/VR smart glasses and that huge AI partnership with Apple, integrating Gemini into Siri. They're outperforming the broader market, and insiders have been net buyers by over 2 million shares. That 32% net profit margin and 35% ROE are just phenomenal. They've been a solid buy for us since January 20th, and those are very strong numbers.
Ethan, those are indeed very strong numbers. But again, a PE of almost 33 and a PB of 10.4 reflect significant growth expectations already. And we can't ignore the debt-to-equity ratio, which is listed as 11.4. That's unusually high for Google and warrants further investigation, even if their cash flow is strong. The post itself had no user comments, so the bullish sentiment is based solely on the report's content.
Still, a huge player making huge moves.
Google is a buy for us today, riding on that strong AI/AR push and insider confidence.
Moving to Netflix, NFLX. Despite some recent stock performance, the overall sentiment is bullish, driven by strong Q4 earnings, anticipated subscriber additions, and big AI initiatives. Users are making bullish options trades, and the stock is trading near its 52-week low, which many see as a fantastic entry point. Revenue growth is at a robust 17.6%, and ROE is a stunning 42.76%. We last had it as a cautious buy or speculative gamble last week, but things are looking up.
Ethan, that near 52-week low also reflects significant previous decline, indicating market skepticism. The beta of 1.71 makes it quite volatile for options plays. And while those growth numbers are good, we need to consider the antitrust concerns surrounding a potential Netflix-Warner deal. That could create regulatory headwinds if a deal is critical to future growth. But insider buying has been positive. For NFLX, with the strong Q4, positive outlook for subscriber growth, and insider confidence, we're upgrading it to a buy. Now for something a bit different, USA Rare Earth, USAR.
The posts show massive gains, over 700% for some users. This is an incredibly bullish play, driven by major investors piling back in and the strategic importance of rare earths for U.S. autonomy, even reports of government funding and interest from high-profile figures. Our last rating on January 26th was stay away, but the community optimism is off the charts. Ethan, this is a classic high-risk, high-reward situation. While the narrative is compelling and the government funding is massive, the KPIs are frankly abysmal. Negative EPS, zero net profit margin, negative return on equity, and a deeply negative price-to-book ratio. This company is not currently profitable by any traditional metric. The stock is also solidly in overbought territory after that rally. This is pure speculation on future potential. But the future potential is massive, Brooke. For USAR, given the current fundamental financial health despite the speculative upside, we must classify it as a stay away.
All right, let's talk about Apple, AMZN. It's looking bullish today with news of AI wearable development, a major AI services overhaul with Google's Gemini, and smart glasses debuting in Q2. Insiders have been net buyers and analysts are saying, own Apple, don't trade it. That 171% ROE and nearly 27% net profit margin are just stellar. Our last rating was stay away on January 21st, but this looks like a strong turnaround for future innovation.
Ethan, those are definitely strong financial metrics for profitability. However, the 34 PE and 51 PB ratios are very high, even for Apple, especially with current revenue growth at a more modest 7.9%. These new products are still in development or just launching, so the market is largely pricing potential rather than proven new revenue streams. We need to see that growth accelerate to truly justify these valuations.
I think the innovation is undeniable.
For Apple, with the exciting new product pipeline and strong core profitability, we're upgrading it to a buy.
Next up, Next Energy, NXXT. Our posts are incredibly bullish, highlighting exploding revenue growth, 253% year-over-year in December 2025 alone. Users see it as a solid accumulation zone near its 52-week low, undervalued for its growth trajectory. Plus, they're securing long-term power purchase agreements for healthcare microgrids. The overall insider buying supports a positive outlook. Our last rating was stay away on January 9th, but this looks like a massive turnaround.
Ethan, I have to pump the brakes here. While the claimed revenue growth is impressive, the reality of NXXT's financials is deeply concerning. It has a deeply negative net profit margin of negative 86%, negative EPS, and a truly alarming negative price-to-book ratio. This company is losing money and has negative shareholder equity. Being near its 52-week low often means the market has lost faith, regardless of growth claims. This is purely a bet on a speculative turnaround.
But the microgrids and AI platforms sound promising.
For NXXT, despite the optimistic community posts, the dire financial health means we have to classify this as a stay away.
Let's look at SK Telecom, SKM. This one's an interesting pure play on Anthropic, a major AI company that could IPO soon. Users are excited about SKM's $2.1 billion stake, which is a significant portion of its market cap, seeing it as undervalued. Plus, it has a high 5.64% dividend yield. This is its first mention on the podcast, but the AI buzz is palpable.
The Anthropic play is compelling, Ethan, but we need to be cautious. SKM's core business actually shows negative revenue growth, which is a red flag. There are also concerns among users about potential dilution of their Anthropic stake, reducing it to a much smaller percentage. While the P/B is low, suggesting undervaluation, AI application companies aren't typically profitable yet. This is a speculative bet on an IPO, not a guarantee. But that dividend provides a nice floor while we wait. For SKM, acknowledging the strong speculative catalyst and attractive dividend, but also the risks, we're calling this a cautious buy. Finally, United Health, UNH. Our data flags it as a 2026 bull candidate, expected to return to all-time highs. It's seen as undervalued, with upside to over $400 a share. It has a solid dividend yield and low beta, making it a good long-term hold. Plus, insiders have been buying a significant amount of shares. Our last rating was stay away or speculative gamble in late 2025.
Ethan, UNH has fallen significantly from its 52-week high, and that's largely due to recent negative news, specifically proposed lower Medicare rates. That directly impacts their revenue, and critically, their relatively modest net profit margin of 4%. There are also headlines questioning the health of their balance sheet, and while the debt-to-equity ratio is manageable, it's something to watch if profitability is squeezed. The future impact of these regulatory pressures is still uncertain. Insiders are buying, though. That's a positive sign. For UNH, with the recent regulatory headwinds and current balance sheet concerns, we're classifying this as a stay away.
All right, let's recap our daily hunt. Here are today's candidates for deeper analysis. Investigate as buy, NVIDIA Corporation, NVDA, Amazon.com Inc., AMZN, Alphabet Inc., GOOG,
Netflix Inc., NFLX, Apple Inc., AAPL, Meta Platforms Inc., META. Investigate as cautious by SK Telecom Co. Limited, SKM. Investigate as speculative gamble, USA Rare Earth Inc., USAR. And that wraps up another episode of the Daily Hunt for Multibaggers. Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Absolutely. Thanks for tuning in, everyone. We'll be back tomorrow with more market insights. Have a profitable day.